What's up, you guys? Thanks so much for joining me today. It's your boy, the Finance Bro, and in this video, we're going to be taking a look at the most recent quarterly reports that were released on April 29th, 2026 for Alphabet, aka Google, Meta, Amazon, and Microsoft. This video is actually recorded half an hour after the quarterly reports were released. There are some earnings calls later on in the day, so let's see how those transpire. As always, this video is not investment or financial advice and is solely for entertainment purposes. Let's dive right in here. We'll start with Microsoft. Across the tape, we can see total revenue equating to $82.89 billion, operating income of $38.4 billion, net income of $31.78 billion, and they did report an earnings per share of $4.27. Phenomenal numbers when we look at it on a quarterly basis. That's just 3 months of revenue. Quite phenomenal. Cloud revenue was actually up 29% year over year to $54.5 billion. What's extremely staggering is the commercial remaining performance obligation, the CRPO for short. That stood at a staggering $627 billion, representing a 99% increase, almost doubling year over year. This suggests a massive backlog of enterprise contracts for Microsoft's AI services, more importantly, its Stack AI services that does include its Azure and Copilot combined together. Capital expenditures were up at $37.5 billion in the most recent quarter, but Microsoft did project declines in its CapEx, which should be a good positive for investors to look at long term, as it does indicate Microsoft is moving from buying the GPUs to deploying them, hopefully paying dividends for the company in the future. And speaking of dividends, the shareholder returns equated to $10.2 billion through Microsoft's minuscule dividend and its buybacks that management executed and delivered on. Overall, this is a great quarter. To see that $627 billion backlog is staggering, is phenomenal to see, and that does provide good revenue sources down the road for Microsoft long term. Let's see how this transpires, but overall, from what we can see across the tape right now, not too bad of numbers for Microsoft. Next here, we're going to dive into Amazon. You can see total revenue was up 17% year over year to $181.5 billion. Amazing just to say that out loud. That's, again, 1 quarter, 3 months of revenue. Phenomenal just to see that there. The biggest revenue generating company in the world. Operating income stood at $148.5 billion, representing a 30% increase year over year. Net income was $30.3 billion. I do just want to mention that $16.8 billion of that net income was actually from a pre-tax gain on its Anthropic investments. AWS grew at 28% year over year. Its revenue of $37.6 billion. Amazing to see its fastest pace of growth in 15 quarters. Management attributed this to rapid adoption of Bedrock and Trainium-based workloads. This is paying dividends for the company long term and integrating multiple segments of Amazon. Ad revenue reached $70 billion. Phenomenal over the past year. That does cement its place in Amazon's high profit margin businesses. Amazon has multiple high margin businesses in AWS, in its ad business, and so forth. Also, what was confirmed in Andy Jassy's letter, Trainium chips topped a $20 billion annual run rate. Amazing, just confirmed what the CEO mentioned. I also do want to mention that all 4 of these companies, guys, we did take a deep dive in previous videos. Go check those ones out. Don't be afraid to hit that like and subscribe button. But if you do want to take a deeper dive into these companies, go check those out. Now, here we'll dive into Alphabet, aka Google, which did have total revenue of $109.9 billion in the quarter. That does surpass the expected $106.98 billion. What the real shock here was the earnings per share that was reported of $5.11. That does surpass the projections of $2.63. Quite a big beat, almost double the projection on its earnings per share, which is what we want to see. Also, cloud revenue was $20 billion. That increases 63% year over year. Now, Google Cloud, the big three in the space are Microsoft Azure, AWS, and Google Cloud. And you can see that Google Cloud had the largest growth year over year. And that does make sense as it is the smaller of the three. And just through the law of large numbers, capturing more market share should rapidly grow its earnings and revenue relative to more mature, saturated players. Still quite phenomenal to see that 63% year over year growth. The YouTube ad revenue was also up 11% year over year to $9.9 billion. Now, I encourage you to Google what Alphabet bought YouTube for many years ago and see how great of a return that investment has been. Again, revenue up 11% year over year to $9.9 billion. Google search and other revenue did equate to $60.4 billion, representing a 19% increase year over year. CapEx, I also want to mention, was $35.7 billion. Comparing that to $17.2 billion at the same quarter last year does represent almost doubling the CapEx in the course of 12 months. Alphabet does have a good return on invested capital, assets, and equity long term. They do have that track record. So hopefully these capital expenditures that are going really into AI infrastructure developments for Alphabet pay dividends long term. Speaking of, Alphabet did increase their dividend by 5%. Now, Alphabet doesn't pay a large dividend to begin with, but to see an increase is always welcomed. We also want to mention here, we saw that in Microsoft with the $627 billion backlog. What's even more phenomenal here is Google Cloud's backlog almost doubled to $460 billion, still highlighting the massive demand of Google Cloud. This is either a good thing or a bad thing, depending on how you look at that. But to have two companies having $1 trillion, more than $1 trillion, I should say, handsomely over that amount in backlog for just two companies is quite remarkable or quite scary. What I found very fascinating as a takeaway was 75% of the new code at Google is actually now AI generated. Just a little tad that I wanted to put in there, but overall we can see that this is also a good quarter for Alphabet and good growth in multiple segments of Alphabet. Lastly here, we're going to dive into Meta. Meta had revenue of $56.31 billion, representing a 33% increase year over year, earnings per share of $10.44, net income of $26.77 billion. That is up 61% year over year. Amazing to see that. Operating margins were 41%. That was essentially flat from the same time last year. Capital expenditures in the quarter did equate to $19.84 billion. Not as large as the other companies that we just saw, but the common narrative here is CapEx is rising. Cash and short-term securities on its most recent balance sheet report was $81.18 billion. Quite phenomenal here. And what's very important for Meta is its family daily active people, aka DAP. That equated to 3.56 billion on average for March 2026, a 4% increase year over year, but a decline quarter over quarter just through regional disruptions in Russia and Iran. Ad impressions rose 19% year over year, which is quite amazing to see. That was always a worry for Meta. Let's see what happens long term. You can see good revenue outlook, but Meta is increasing its capex. We looked at the last video at the bottom, and now is $135 billion. That was the former top end. To now the new top end is $145 billion. That is an increase, and that might not be something we want to see, but Meta does have a good track record of delivering returns on its invested capital, assets, and equity. So this CapEx being raised may not be a negative long term for Meta, but seeing CapEx raised by $10 billion in this case is not something that we ideally as investors want to see. Again, let's see how this transpires down the road for Meta. Overall, the common narrative across all 4 of these companies' reports is that CapEx is remaining, AI backlog is still there, AI demand is still there, and we should continue to see this demand increase over the coming quarters. Let's see how these companies deliver on their targets. I also want to mention this is not investment or financial advice. This is the numbers that just came across the board less than half an hour ago. We are still waiting on calls from these companies. So let's see what they have to say in those calls and how shares trade tomorrow and the coming days. As always, guys, thanks so much for making it to the end of the video. Please do hit that like and subscribe button. Stay tuned for not only the next video, but what these companies do long term.